So, Larry, in the last segment, you said that the Fed likely realizes that they've overcooked the goose. What does that mean? And importantly as well, you talk about everything that's been going on now that we will see the greatest migration of assets in 2023. What does that mean?
Sure. Well, since the last hiking cycle, Catherine, since 2018, the planet Earth has added 50 trillion with a T more debt. And a lot of that debt was issued at less than 1% coupon, less than 2% coupon. So the losses on that debt is so spectacular underneath the surface that it's creating a lot of damage to the system. And
And wait, Larry,
that
let me
means
just
that
stop
when
you
you
there because
do,
yeah, I just want people to understand that when rates rise, the value of bonds go down.
yeah,
That's the loss that you're talking about. Okay, sorry, go on.
exactly. No, that's important. And exactly, interest rates up, bond prices down. So you're talking about such a damage with this is an experiment. These are academics that have never taken professional risk. They've never sat on a trading floor the way you have or the way I have. And they really just guessed, right? They're like, okay, we can do, they just did 325 basis points in 6 months. That's the same amount of hiking or more than they did over 3 years in the last cycle. And it's extremely dangerous with this much more leverage in the system. And so it's very clear that they know. I was in Washington last week. I've met with some people at Treasury, some ex officials, and he said they're getting blood curdling phone calls from finance ministers around the world. So there's no question that the Fed is waking up to this. And when they when they slow down and when they reverse policy, the dollar is going to start to weaken. And the amount of money that's in financial assets versus hard assets is just spectacular. Everybody's invested for the
Uh,
previous decade, right? So the previous decade, you have very certain deflation, very certain, and you had a lot of money in growth stocks. You didn't have any money in emerging markets or value stocks or commodities. Now, this year, you've seen some money move into commodities, but we're going to see the greatest migration of assets from financial assets, which are growth stocks and bonds, to hard assets. And that means value stocks, steel, copper, aluminum, gold, and silver, especially for solar. And so this big migration of assets into value stocks, emerging markets, and hard asset companies. Where that's where the big migration is going to go. For example, one quick point: in 1981, the last time we had sustained inflation, industrials, materials, and energy were 49%
hmm.
of the S&P. 49%. As of like January, that number was down to like 12 or 13. So we're going to have a migration where the S&P is going to change from very heavy tech over the next 3-4 years to much more industrials, materials, and energy.
What has to be the underlying economic scenario for that to make sense? I mean, presumably it would be demand, but if we've got higher inflation or stickier inflation for longer, the whole issue in terms of the volatility in the commodity complex over the past number of weeks or however long, even though it's still elevated versus where it was, has been demand destruction concerns around the world.
Yeah, there's a lot of that. That's because of the dollar, right? So the dollar's like this global wrecking ball. There's 75 trillion of GDP outside the United States and only like 26 or 28 trillion inside the United States. So when the dollar rips higher, it crushes the global economy. That hurts demand. And that's what the Fed's been doing. They're trying to, really slow down inflation. But when they reverse policy, the dollar weakens. That'll support the global backdrop. And then at the end of the day, inflation this cycle is going to normalize at 4 or 5% instead of 1, 2, and then stay there for a number of years. And that's what creates this great migration. I'm very, very with the highest confidence that is about to happen.
Hmm. Interestingly, as well, when you say that the Treasury is getting finance ministers from around the world calling them daily, I mean, I've heard this for quite some time now as well, because of the very strong U.S. dollar that's putting so much pressure on their currencies and importing inflation. Correct? Like that's something we don't. I don't think we hear a lot about that in the general news, do we? But this is happening behind the scenes.
Yeah, it's really a shame because much of the media establishment, even the Fed, they pretend to be so progressive. They pretend to be, care about the little guy, which, they do in the United States, but they're obliterating, poorer countries. You've got to buy oil and gas in dollars.
Yeah.
So not only is oil up 10, 15%, you got to buy food in dollars. And all of this
Right.
creates, essentially the Fed is exporting inflation to poorer countries around the world.